Hi, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 26th of June, 2009. It's a pretty quiet day in the market, so I figured I'd take a look at gold. I get a lot of questions about gold, so I'm looking at the gold ETF that trades on the New York Stock Exchange. The symbol is GLD, and it's supposed to mimic approximately 1/10 of an ounce of gold. So when it's at $92.35, that approximately equals, and the math doesn't work all the time, $923.50 an ounce. The math again is not perfect. Don't get hung up on that. Instead, use it as a proxy for gold. I've been talking about this inverted head and shoulders pattern in the gold in ETF here on the weekly time frame, meaning that each one of these candles represents 1 week worth of data. Now on here I've got four moving averages: a 10-week, 20, 30, and 40, representing the 50-day, the 100-day, the 150-day, and the 200-day moving average is that green 40-week moving average, obviously because there's 5 days in a week. Now we see that ideally, what this pattern should have done was to break this neckline here at the completion of the right shoulder. Instead, we've seen a pullback. Now, that pullback doesn't necessarily mean that gold can't go higher, but what it does is it gives us another higher low in here to set stops under. So if we can get this market going once again, create another higher low right in here, I think that for a longer term investor in gold, you could have a pretty good entry point in this area, because you could set your stop underneath this higher low on the weekly time frame. So if we drill down now to a daily time frame, so we're going to take a look at approximately this much worth of data, each one candle now representing 1 day. So we can see that black moving average is the 200-day, which was the green 40-week moving average right here at about $86 a share or an ounce, whatever you want to call this. But we've got a rising 50-day moving average in here as well. That's the green moving average. Now, this is what was looking like our right shoulder on the weekly time frame. That's this level right here. So when we go back to the daily time frame again, we can see this recent decline. And what I've been pointing out in here is that from the bottom of the right shoulder up to the recent rally, we hadn't retraced 2/3. That is a Fibonacci retracement of greater than 61.8%. And Google Fibonacci if you're not familiar with that. But basically, beyond a 61.8% pullback is considered a failure. So it's found support above that retracement level. It's also found support near the rising 50-day moving average. What I've been focusing on is the 50-day moving average. A lot of times gets confused as a place to buy. It's not a place to buy. Instead, though, it's a reason to look at other technical evidence that maybe the buyers are showing up in there. Well, it's also the location of this rising trend line. And when we take a look at the 30-minute, let's look at an hourly time frame. These are actually 65-minute, and I've got the wrong moving average in there. That should be 30. Let me just change that real quick. But what we're looking at here, I don't know why that didn't change, is a 65-minute chart here. Each one of these candles is equal to the same 65-minute period, and we've got the market open for 6.5 hours each day, so we have equal lengths, whereas we have six candles representing 1 day that are of equal length. If you were using 60-minute candles, there would be a 1/2 hour chart candle actually in six 30-minute periods. Anyways, the point I wanted to make in here is that we've seen that the 5-day moving average has been pretty good as far as capturing the intermediate term trends. A rising 5-day moving average, or 30 periods, 30 of those 6.5 65-minute periods equals 5 days worth of trading. So what we see in here, and now we can drill it down a little further to a 30-minute time frame, is the direction. When the direction of this 5-day moving average is lower, then we want to look at it as guilty till proven innocent. We want to be aware that down here on the daily time frame, so we're looking at about a month worth of data on 30-minute candles. So I'm just going to take us back real quickly to the daily time frame and show you again that we're looking at this little area in here. Is those two little areas I had just circled or highlighted on the 30-minute time frame. So it was near the 50-day moving average in there. So when it's near the 50-day moving average, that's this period, what we want to do is we want to look for evidence that the buyers are taking control. Just buying it on a pullback to the 50-day moving average is something that a lot of people do, and I think that's wrong because, of course, you'll be right sometimes, but it exposes you to risk while the trend is still lower highs and lower lows. Instead, what we want to do is we want to see the market recover like it did here. It got back above this level, and then that acted as support. We've also got this 5-day moving average had flattened out, and now it's starting to turn higher. So what I'm going to do now is take us down to a 10-minute time frame. So each time we're going to take a closer look. So we're going to look over here, and these are the concepts that I talk about in my book, Technical Analysis Using Multiple Time Frames. So we can see here, if we take a look at I guess about 15 days worth of data, we've had some resistance in this area recently, right in here. This basically at about 92.5 to 93. So what we saw today is we saw some strength. The market gapped higher, and then it pulled back immediately. So gold gaps basically every single day, which in my opinion makes it a horrible day trading product. But we do have a rising 5-day moving average. We also have right here, we have these higher lows. So it's looking like the buyers are getting more aggressive price wise. They're getting more aggressive time wise because now they're taking control over a longer term time frame. So when we look at this on a 5-minute time frame now, each one of these candles is 5 minutes worth of data, we can see this is the average price of the last 5 days, the volume weighted average price. So we can see that this market gapped higher and then it pulled back. Well, right now we're going to drill down just to today's trading. And what we see in here is the market gapped higher. It sold off a little bit. Now this is the volume weighted average price for today. Basically, it's saying the average price for today is at about $92.39. We're at 92.40. I think if it gets back above here, it puts the buyers back in control for the day, and possibly now that what we would see here on the 10-minute, let's go to the 10-minute again, is that we had seen this little break past this level here, and then we had seen a little shakeout that survived. So that which doesn't kill it makes it stronger, and if we can get some momentum back above that 92.50 level, then I think the buyers are back in control. Now, how you want to trade this in terms of how long you might want to hold, if you were an investor, I would say you put your stop down below here. It looks like a good entry point because we have momentum coming into gold right now. You don't want to buy on pullbacks because it might just keep pulling back. Instead, you want to buy in strength as the buyers regain control of the intermediate term time frames, which it appears on this 30-minute time frame that they are gaining back control. So where would you want to set your stop? Well, if I was an investor who's thinking maybe I want to hold it for weeks or months or whatever, then my initial stop would probably go down below that $90 level, so risking about $2.50 or about 3% on the on the GLD. For it to really get going, probably needs to clear that $93 level and close above there. But the way that gold gaps, it might gap up higher on Monday and then continue to rally. So I think this is about as good an entry point as you're going to find for the long case in gold with limited risk. Now, for a swing trader, I would suggest the stop would probably go below here. If you want to be a little bit more conservative, I'd say worst case below that 5-day moving average, which is advancing, and also this prior little pullback low at about $91 a share. It looks like gold is turning up. Things change quickly in this market all the time, obviously. So if you're going to be a buyer, make sure you manage your risk. More information like this every day on my blog, alphatrends.net, or also you can follow me on Twitter where I am at alphatrends. Thanks.